Good day, fellow investors. You want stocks to buy? Let's go. In a recent video where I discussed 3 interesting European stocks, I had this comment saying how, yes, this is all interesting analysis, but Sven, please give us stocks to buy. Okay, let's go. I just went to search a little bit into the structure of my YouTube channel, and yes, we discussed the market and we discussed the risk and reward of investing in various stocks. But if you really want stocks to buy, so 13 days ago I told you ADM is a stocks to buy. I told you about the Chinese cheapness of the market. This was a risk and reward play that I didn't tell you to buy, but it offers significant potential. So I am here giving constantly WBD, we discussed HP, so constantly stocks to buy. If I go further, Berkshire, depends how it fits you. Cyclical by Maersk to watch over time. Interactive brokers, that is also doing good. See how Verizon fits here. You can just go back and check my channel to see the discussions there. Immediately told you ADM was already a buy after the accounting scare that wasn't that scary. BYD depends on how you look at it. So constantly analyzing stocks to buy. Another one, FMC. And also, of course, if you want stocks to buy, you just check my research platform. The link is in the description below. I think we are already at 5 or even more stocks to buy, depends on you. Alpha Meteorological Resources, that one went up definitely over time. So I wish I had many more stocks to buy to offer you, but I think you get practically one a week here on my YouTube channel, in addition to many more risk and reward analysis. But when it comes to stocks to buy, I think there are other things that are much more important. Just an example here from Buffett's portfolio. Check this out. These are his top stock market positions. And when had those positions been built? Apple 2017-18, Bank of America 2011, American Express during the 1990s, and Coca-Cola during 1988. So Warren Buffett bought his portfolio positions, we can say, 1 decade. And you are asking me to give you stocks to buy constantly every week, and that's simply not how investing works. Because one can say that every stock is a buy, and if you look at YouTube videos, you will find stocks to buy everywhere. I was just scrolling, and the first discussion here is Cathy Wood discussing Archer Aviation, and she says that they have high conviction based on their research that given the cost of traveling and batteries and everything, there will be more cars on the road, congestions, and that the future is that we will all use sky air taxis pretty soon, and therefore she has a high conviction level that this is a buy now and you will make a lot of money. Okay, if she can sell the story on a market cap of 1.5 billion, this can easily go to 3, 5, 7 billion if she enters a Reddit forum, and that's likely the key discussion there. However, let's dig a little bit deeper here and discuss the buy and sell stock situation on the market. If we look at Archer Aviation, 4.79, okay, and you can see here that there are normally hundreds of transactions on just a daily basis. But if you think about, someone bought yesterday at 4.79 and he was a happy champ for buying at that price because robotaxis will take over the world in the next few years. However, somebody sold at the same price because that's the nature of a transactional market. And she was happy for selling because, I don't know, the business will not reach their targets or there is something better. So you have to keep in mind that there are 40 million transactions just on the New York Stock Exchange when someone is buying, someone is selling, and both parties are happy, let's assume, for the buy and the sell. Therefore, we can deduct that every stock is a buy whenever there is a transaction, because someone is buying at that price. However, as we discussed here, we have to see whether at that price the risk and reward fits us, our personal requirements, our portfolio, and our investing long-term goals. And if you can build up over time, if you can build your wealth over time by investing in that at that moment in time. And the essence of value investing is how the risk and reward fits you. That's the core. If you can understand that, then you will see also the value in what I do, and you will see how and when the risk and reward fits you. That is essential. And this was a nice comment on medical properties and Vonovia, that a video that I made, I think, last year. And the comment was about thanking me for not losing money on, I think, medical trust properties. But this is very interesting. If I look at when was this made, March 2023, and let's check the stocks as we discussed REITs. Medical properties trust just went down. Okay, so the risk was not for the taking there, but just look at this. So I made the video here, end of March, and just 3 months forward, it was up 37%. So if someone watched the video, sold the stock, he would say, Sven, you are a total idiot. Look, I lost 37%. But then, of course, later it went lower. However, this is very interesting. Vonovia, the German, let's call it REIT, even if it isn't, it went up 45%. Even if I said it is too risky because of the debt, etc. But stocks go up and down all the time. Nobody can predict what stock will go up and down. You have to see whether at that point in time the risk and reward is fitting you. Both these stocks had debt issues, and usually when you dabble in these debt issues, it's either a big win going forward or a big loss going forward. And when you sum these things up, it's hard to compound over time, and that is the essence of value investing and the message I want to try to submit over this channel. We try to look at situations with low risk, or even that we watch the risk because we don't know when it could materialize, for a good reward. And the essence is that we compound over time, and if you don't have losses that bring you back to zero, you can compound. And this is the S&P 500, and just an example here, from 2002 to 2009, it went nowhere. But real investing is, I have, let's say, $1 million invested here, but somehow with dividends, with risk and reward, with watching, I get here to, I don't know, 1.5 or 2 million. You have increased your lower level of wealth over a business cycle. You have increased your lower level of wealth over a business cycle. Okay, now we are really up, inflation, money printing, etc. But we don't know what the future brings. The key is that you, again, increase your level of wealth over these business cycles. The lower one, we don't know whether the market will go in the future, but by buying fundamentals, by understanding the risk and reward and how it fits a portfolio, then you can invest. And therefore I want to make this stock to buy categorization to explain this a little bit deeper. This is a stock that I'll discuss tomorrow, a very interesting business, and you will see it is a relative buy because it offers growth at average market valuation, so it is undervalued from that perspective. However, an absolute buy, maybe if you are happy with the 2.5% dividend and likely 5 to 7% growth. Sum that up, that's 9%. That's not even a bad, that's a great long-term return. Thus, it is also an absolute buy. However, when it comes to value investing, is it a margin of safety buy where I cannot lose money no matter how the business develops going forward? That is something that I have a few on my research platform, and I cannot share that on YouTube. Here and there I share something. So stocks to buy, check my research platform, and the rest, see how this fits your investment strategies. Thanks for watching. I'll see you tomorrow with this stock.